Well, welcome back. Now, in this episode, I'm going to answer your question, how to make money with tax sale overages. You're going to find this very interesting. So first of all, I'm Ted Thomas, and for the past 30 years, I've been involved in real estate, but especially tax liens and tax defaulted or tax deed properties. So we're going to talk about that, and we're also going to talk about tax sale overages. This is one of those questions that comes up on a pretty regular basis. So I'm going to show you how to make money with tax sale overages, but first we have to understand what the whole thing is all about. So I'm sure you're going to find this interesting, and you're going to find it's unique, because a lot of individuals ask about it. So now I'm going to try to walk you through it, and as you understand it, you'll see that this is a little known, but really a way to make big money. So stay tuned. I'll be right back. Okay, what are we talking about? How to make money with tax sale overages. So you're going to like what you hear. These bids at tax auctions are usually just the back taxes. So basically a property is confiscated, then they start an auction, and they start the auction at basically the back taxes, and then the property is actually sold to anyone that wants to buy it at a live or online auction. Now these are public auctions. Anybody can go to the auction. Thousands of properties are sold every year at public auctions. There's going to be over 5,000 auctions, and there's over 3,000 counties and 1,400 municipalities that all sell properties at these auctions. Now, the state legislature makes all the rules. I don't make the rules, the legislature does. And what they decided years ago is, number one, that they were going to levy taxes. Number two, they're going to collect taxes. And number three, if people don't pay their taxes, they're going to confiscate the property. So that's basically the law that's made by the legislature. Now, who executes the law? The county treasurer, the tax collector, and basically government officials. Okay, they're the ones that are going to issue the notices to the people and say, look, you didn't pay your tax. If you don't pay the tax, we're going to confiscate your property. That's really called due process of law. Now, there might be many notices, but the property owner will always know, they'll understand the consequences, because there would be issued many of these notices. Now, what you really want to find out today is how to make money with these tax sale overages. So to start with, after all the taxes have been levied, they'll have an auction. Now, where's the auction? It could be anywhere. It could be online. It could be at the county courthouse. They're going to start the auction at very close to the back taxes. However, properties always don't sell for the back taxes. They could sell for an amount way above the back taxes. For example, let's take a $75,000 tax-assessed property. It comes on at the auction at only $5,000. Well, there's going to be competitive bidding from both sides of the room. All right, now, what if the competitive bidding takes it up to $30,000 or $40,000? Well, only $5,000 in taxes would do. And that's where these tax sale overages come. All right, now the county runs these auctions pretty darn efficiently. So let's learn a little bit about them. Number one, they're always going to be held in a public forum. By that I mean they're going to be at the county courthouse, for example. They could be online. They'll always be announced in the newspaper. If they're not in the newspaper, then they're going to be at the county website. Now, what's going to happen? The local government is going to auction that property off. Why are they doing that? Because the county needs revenue. The county didn't get the revenue they needed. They need revenue to take care of the schools, take care of the school teachers, fix the roads, pay for the court systems. So the county has a lot of demands for money. Of course, number one is always to pay the police department, and number two is to pay the firefighters. So the county needs money. So what are they going to do? They're going to confiscate that property, and then they're going to put it back out into the marketplace at an auction. And they're going to actually sell a deed to that property. Now, a couple of different things happen at that point. When they sell that property, number one, they take the property off the delinquent tax roll and they put it back on the normal tax roll. Well, what's the normal tax roll? Well, that's the people that normally pay their taxes. In other words, they pay their honorable tax payers, and they pay their taxes when they come due. So the property that isn't on that roll means they're not collecting any money. The county's in the business of collecting money. Take my word for it. They want that money. So what they're going to do is auction the property to, number one, get revenue. But number two, what they're going to do is they're going to transfer the property to a person that will pay the taxes. All right, now those public auctions are happening all the time. You could plan on 5,000 of them at least this year. They're always held in a public place. They're not trying to sneak these around. A lot of people just don't know about it because they don't study tax liens and tax deeds. But you can see these auctions go on, and you can actually go visit when they're taking place and watch what happens, which is one of the things we recommend all our students do. All right, so the tax roll is responsible people. Now we have a property, it's been irresponsible. In other words, the property owner did not pay the tax. So now the county will have that auction on the courthouse steps. Now the actual auction is going to sell the property to the highest bidder. Now that could be you, it could be me, it could be anybody. The highest bidder gets it. So let's say that a property has a value of $100,000, but the bidding started at $10,000. Well, now there's a lot of margin between $100,000 coming all the way down to starting bid of $5,000 or $10,000. So you get my point. So people buy at those auctions, they want to get the best deal they can below the market or the tax assessed value. So what's going to happen is the auctioneer is going to start that auction out, and they're going to start at the back taxes. Now, why would they start at back taxes? Because they want the revenue that's owed to them. So once they get to that revenue, anything that goes above that is going to be an overage. That's right. Anything above the taxes is going to be an overage. So as you look at the slide, the auctioneer is selling. What does he want to do? He wants to take the deed that he has and give it to someone that'll pay taxes, and he wants to collect money. Really simple process. Been around for 200 years. I didn't invent it, but once you understand it, as simple as I make it, you'll be able to do the whole thing. So in a competitive market, if the property was worth X, in other words, a high number, 75 or 100,000 or more, are people only going to pay 5? Well, if nobody shows up at the auction, you might get one of those for 5 or 10 cents on the dollar. But if a whole bunch of people show up at the auction, well, guess what? It's going to be a competitive auction. So all of the auctions will not have a lot of people. Some of them will be very crowded. Basically, only 2 or 3% of all the tax lien and deed buyers even know what's going to happen to the overages. But you're going to be insider now. You're going to know what's going to happen to these overages, and if you want, you could take advantage of that. All right, so the property owner defaulted. When they default, they usually abandon. Who knows? They disappear. I don't know what happened. They maybe even could die. Let's hope they didn't die. But the point is, they could, and they're not going to pay taxes when they're dead. That's for sure. All right, so in the competitive market, the property will be sold. So let's have an example of that. So let's say the property had a market value or an assessed value of $75,000. You might want to write that down, but I'll show you a graphic on it in a minute. So $75,000 is the value, but they started at $5,000. Well, you and I both like to buy it at $5,000, but every property doesn't go for $5,000. What if another bidder comes in, maybe the guy next door, and says, I'll pay $45,000, and he raises his hand? Well, what's the auctioneer going to say? Sold. He's going to sell that property for $45,000. Now that might take 10 minutes to go from 5 to 6, 6 to 8, 8 to 9, 9 to 10. Take a long time to get to the $45,000, but the auctioneer's going to sell at the highest price. All right, so the guy that bought it, is he happy? Yes, it was worth $75,000. He bought it for $45,000. Figures he cut a fat hog. All right, everybody has a different perception of value, but you've got the system now anyway. So the highest bidder said they'd pay $45,000. Not bad. All right, now, most people don't know from this point on because they saw the auction take place. They saw the $45,000 go from the bidder to the county. So that's the end of that. Next comes the next property. Now, if you know about real estate, you know about auctions, there's going to be a long list of these at all the auctions. Remember, there's going to be at least 5,000 of these auctions this year. So you can go to all the auctions you want to, and you can do them online. All right, now who does the auction? Most of the time, it's a county employee. So the county employee will come from up in the building, they'll come downstairs, and they'll auction property. All they want to do is get rid of the property. Now, sometimes the county will hire a professional auctioneer. Now, what's the professional want to do? Run the price up. So they're really aggressive. I have 9,001, I have 9,002. That's what they want to do. So they're going to do that. But the purchaser of the property is always the highest bidder, whether it's online or offline. So let's look at a perfect example on tax overages. So in this case, the market value or assessed value in this case is $75,000. Remember, it's just an example. All right, $75,000. But the auction started at $5,000. All right, but a bidder paid $45,000. So, is everybody happy? Yes. You aren't happy because you didn't get it, and you wanted it for $5,000. But the guy that bought it, he's happy because he bid $45,000. The county's really happy because they only were due $5,000, but now they're going to get 45. Okay, that's tax auction overages. Wow, what's going to happen to that money? Well, I can tell you right now, this episode is all about what I said. Tax episode is about tax sale overages. How about that? Tax sale. Now, there's a big overage here. There's $40,000 over the bid amount. So what will the county do with that money? Number one, they'll make sure $5,000 goes to the treasurer. Now they got $40,000 left over. That stays in the tax collector's account, just stays there. The remaining overage of $40,000 stays with the county. So what is going to happen to that money? So people say, I don't know what's going to happen to it. Most people don't care what's going to happen to it because they just went to an auction. But there are some savvy investors that do care. And really, as you can see now, looking at the slide, the remaining $40,000 remained with the county. Well, what's going to happen? Well, that money is going to remain with the county, and if nobody claims that money, it's going to escheat. I said escheat to the county. That simply means the county and the state are going to confiscate that money. So they just got a $40,000 gift. And you're saying, wait a minute, I thought that property belonged to somebody. Yes, it did. And in most cases, the county doesn't go and try and find that owner because they might have disappeared, they might have died, I don't know what happened to them, but they make very little effort to contact that owner. So the county is going to keep $40,000 in tax overages. And that money will escheat to the state. Now, just because I'm using these words, I'm not an attorney, I'm not a real estate broker, I'm not a CPA. I'm just an average person like you that spend a lot of time preparing for auctions and understanding auctions. And then I became a full-time investor doing it, and I started teaching about it. So I've taught thousands of people worldwide how to do this. But I'm not an attorney, and I'm not a CPA. All right, so how would you make money with that? Well, I can tell you how you can make money with that. So again, I'm not an attorney. I'm not giving you legal advice, but the county has $40,000. You could learn, and let me show you how you could learn. All right, so you can see a book that says Texas, and on the bottom of it says, let me push it a little bit more. I got it on the camera. It says Public Records Guide, okay? Okay, many counties are required by the state to create a public records guide. Now, this is no small thing. This is about 250 pages. I'll show you. You can take a look. You can see how thick it is. All right, so this is the Information Act, and anybody can learn about these counties. There's plenty of information here. Anybody can learn this. You getting the idea as I flip through the pages? There's tons and tons of information, but here's the information that's there. The information simply is this. If that property owner doesn't come forward and demand to get that money, they don't try to collect it, the county allows it to escheat to them and to the state. That means it's confiscated. And the county does, to my knowledge, does not make any effort to go find that owner. So $40,000 that desperate owner really needed goes to the state and the county. Now, I don't make the rules, but I do know that there's people that make a job of finding other people. So these wise old owls, like you're looking there, they're finding that guy, and then they go make a deal with them. What do? Well, they say, I'm saying to you how to make money with tax sale overages. Well, guess what? If you could find that person and you could tell them where the money is, guess what? Maybe you could share that, okay? I should make an agreement that I could share it before I started telling anybody about it. The point is, I understand the rules from the book I just showed you, from that manual, that in 3 to 5 years, the county won't have the money, it will escheat to the state. Now, I didn't make that up. It's what's in the book, okay? So the money is ultimately going to disappear, and anybody could take advantage of that. So here's again the slide showing how much overage there was. What if you could split that with the owner if you could find him? Well, that would make a nice profit. Most people have no idea what I'm talking about. I'm not in the business of teaching you how to do that. I teach you how to buy tax defaulted property and make money. Before I leave this video, I do want to tell you that you want to be very cautious when you buy it at tax auctions. The two big mistakes people make is, number one, they do not look at the property before they buy it. That's a huge mistake. There could be a fire, there could be a hurricane, there could be a flood and damage that property. Now you've got a worthless property. All right. Secondly, what they don't do is they don't have an exit strategy. You need to have an exit strategy before you buy. For example, in the case that you see on the screen right now, could you sell that property for 75? Well, maybe you could. All right. So you'd have a little bit of margin between the 45 and the 75. All right, at the end of this video, just go below me and you can register, and there's a free gift for you. There's a free gift for you right below me. I'm Ted Thomas.